All right, hello traders, everybody. Welcome to another webinar from Olymp Trade. My name is Yaroslav Berchenko. I'm the Chief Market Analyst at Olymp Trade, and today we are having a money-making webinar. Today we are here to trade the non-farm payrolls. This is going to be one of our first live streams of trading any news event, and you guys are really lucky because this news event is technically called the Traders Payday. This is when traders get paid. I personally know traders that exclusively trade only this news event, and that is how they make their money for the entire month. The majority of their money. Of course, they do come by here and there trading other news events. If this is your specialty, if you would like to learn about how to trade the news, what kind of strategies are available, make sure to stick around to the end of the video. Now, before we get started, I do want to ask you guys if you can hear and see me, and I'm not going to be answering any questions until after the event because we only have half an hour. I have to explain more than a few things to you, and we have to set up some trades and be ready for the news to be released. So as soon as I can get some feedback from you guys that you can hear me and see me, we will get the party started. So one of the things that you should start with your analysis that you should be looking for is, of course, the basic US dollar index. The reason for it being is it's the US non-farm payrolls. Now, the name in and of itself is very, very confusing, and there's a brilliant write-up about what it is on investing.com. I'm going to read it to you. So non-farm payrolls basically measures the change in the number of people employed. It's basically how many people got new jobs. Out of all of the unemployed people, around 10 million right now in the United States, how many of them got jobs in the last month? So right now we're looking for the month of February. It's a very important month. It will lead to the end of the first quarter, which we are now coming to in March. And job creation in and of itself is the foremost indicator of consumer spending. And as you guys may know or may not know, that the United States in general is a consumption-based economy. So they basically create their own goods and services and use them. And they're also an importing nation. They import more than they export. So this consumer spending accounts for the majority of the economic activity in the country. And so this indicator, non-farm payrolls, is a very important, it's the most important indicator out of all of the indicators that we have going on throughout the month. It happens every Friday at the last, or excuse me, not every Friday, every month in the first Friday of the month. So this week is the first week of March, and we came up to the March 5th, which is Friday, which is when we have non-farm payrolls. So I use trading economics as the go-to because the information appears quicker than in any other site that I have tested before. So their API system is directly connected to the Statistics Bureau in the United States, and they get this information online out there for you faster. So we start the analysis in general by looking at the US dollar, and you guys see that we have some upward momentum. The reason for this being is that in general, analysts have come to the conclusion that A, non-farm payrolls are going to be quite large, so over 100,000 is expected during this report, and B, that the economy is also changing direction up into strength. Now, I also did a little bit of my own analysis before the webinar, and I concluded that there are several currencies that are very undervalued right now and doing poorly, and we have some currencies that are doing very well. And so the US dollar is actually very strong compared to the other currencies. I'm going to go ahead and see that you guys can hear me and see me. Hello to my friend Dr. Manajit Paul, Aiden Ruda, Wael Yusuf. Everybody, welcome. We are getting the party started. So I explained to you what the weakest currencies were. The strongest currency today is the Swiss franc. If we have a look at any of the Swiss franc crosses, we're not going to focus too much on that today. I just wanted to kind of let you know the lay of the land, where we are where we stand in the currency market in general. All right. So now that we have understood that we want to buy the US dollar, the US dollar is stronger than other currencies. We want to find some that we want to sell. So I recommend, and we are going to be using Forex more so than not. Let's go ahead and have a look at the US dollar. Aussie dollar, for instance. Aussie dollar could be one of those currencies that I want to sell. I definitely don't like the fact that it's hanging around the 100 WMA, but the trend in general, including the CCI, is now breaking out. So this would be a sell signal, and I would be willing to sell the Aussie USD. The next weakest currency would be the British pound. I had a look at this as well. Now this I like much more. We have already broken below the 50 WMA, and this space is basically what I want to capture. I want to capture all of this right here. I'm not quite sure that this trend is going to be long lasting. So today we're going to open up a trade position for a few minutes and then close it. So again, maybe we will be using fixed time trades today. I will show you a strategy that you can open in both directions, and that is going to be on my demo account because this strategy, in my experience, has not proven to be effective. Nonetheless, it is something that works. So we have Kartik Varugan wanting to have a look at some of my previous trades. I don't know what that's going to give you, sir, except that you're just curious and you want to confirm that you can trust me. So let's start with non-farm payrolls. One of the things that I do recommend you guys do before trading any of the news events is have a look at the previous meetings, the previous stats, and we see that there was this decline that went through all of last year. So progressively, less and less jobs have become available, but starting in the new year, there is some really good news. So again, this is kind of the excerpt that you guys want to pay attention to. The most important, I guess, factors is easing of business restrictions. So the new government, in the form of Joe Biden and his administration, they are easing restrictions on business. This is bullish for the stock market. This is bullish for the US dollar. We also have falling coronavirus infection rate. So this is also another key component of businesses hiring, businesses expanding. And then we have the fast vaccine rollout, which we are expecting to cover the breaking point in about half a year. And again, there's a new vaccine that only takes one shot, and then it starts working, which is really, really good. Like I said, we are about 10 million jobs deficit, so there's about 10 million unemployed people, and we are also considering the stance of the Federal Reserve Chairman, Mr. Jerome Powell, being very, very dovish and understanding that there is still more room for the economy to grow. The economy is still much weaker than it was last year, and we're looking for additional stimulus, which is still being discussed, and we're also looking to keep interest rates flat. We won't go into the yield curve today, as I don't believe it's quite important to what we're trying to accomplish here today. Now, Mr. President Biden is pushing forward the $1.9 trillion stimulus plan, which is going to go through. And when that does go through, that will actually lower the value of the US dollar and also increase the value of the US stock market. So that's kind of the area that we are trading from. Remember the graph that I showed you of the US dollar? We do have that attempt to go higher, but is that going to last? I don't think that it's going to last. And also, guys, we may come up with all of these brilliant ideas and be super smart with our analysis, but at the end of the day, we are not, the event might not go in our favor. And so what that will mean is that our trade will fall through if we are stuck in our opinion. So in my mind, the best trading strategy is not to preemptively open a trade and not to necessarily blindly open a trade in the direction of the news. Again, the market is very tricky and it can be counterintuitive to what it's actually supposed to be. There is no economic law that will say that if the US non-farm payrolls come out better than the consensus at 2,000 or 200,000 new jobs, price may still go up. Again, we are trading against the trend, guys. The two weakest currencies today, which I showed you, was the British pound and the Australian dollar. They are in uptrends, and so if we're looking for a sell today, it may not be super wise. Have a look at this. Have a look at this. We're also going to be looking at the Canadian dollar. So in the regards of the Canadian dollar, the situation is a little bit better, as you guys can see, but it's all the same. We are looking to trade against the trend. This is always risky. This is always problematic. This may always go against us. So quickly, let me show you guys a strategy that I started with a long time ago. One of the ways that you can trade this is you see the volatility we have here and here. So for instance, we open up two trades, one trade going up, one trade going down. Let's go ahead and drop down to a smaller time frame, somewhere around the 30-minute time frame. And what we want to do is if price goes above 127.25, then we are going to be opening an up trade with a stop loss with a take profit of about 500. I'm going to leave the stop loss open. We will come back to this and open it by hand. So the trade right here, if you guys can see it, if price breaks this level and goes to the top, we want to be in that trade. Same thing going down. I'm going to put it below the moving averages because, again, if we continue with the trend, if we continue with the bearish trend of the US dollar, Canadian dollar, we want to sit in that trade. All right, so this strategy might work and might make us more money, but again, it's not something. One of the things that can happen is we can open to the top. There could be volatility that spikes up and volatility that spikes down. So it's not necessarily a safe trade. That's why I'm opening it up on the demo account. So 26.48. Perfect. So this is kind of the trade setup where you blindly open positions in both directions, and we hope that the volatility does not open up both of our positions at the same time. So this is one way to trade non-farm payrolls. Not necessarily what I recommend, but something that is practical and something that has worked before in the past. Not guaranteeing that this will work now, but I wanted to give you an example of another way to trade the non-farm payrolls. That's on the Forex platform. Let's go ahead and open up the fixed time trades, also looking at US dollar currencies. The Japanese yen would be the fourth weakest currency after the Australian dollar, British pound, Canadian dollar, and Japanese yen today. This is only today. I've been monitoring the markets today, and this is what we have. And again, if we are trading, now this is one of the trades that goes in the direction of the US dollar. So what we're going to be doing, we're going to have the US dollar, Japanese yen open, and then on the other side, we're going to be having the Australian dollar. So one of our trades right here goes with the trend. That's in case we have US dollar strength. Now, how are we going to read this? So let's have a look at what the actual numbers have been. So over the course of last year, jobs, there was a sharp increase in October. October was the kind of the big month for the readings before we got progressively lower, lower, and lower. Now, part of this is seasonality. In winter time, usually a lot of companies don't hire. It's usually come February. That's why February is such an important month for trading non-farm payrolls, because usually business picks up on February, and that's when people start hiring. So having a look at the statistics, how you read this graph. Here we have the actual data that comes out. The previous is just the previous amount. Here we have 49. That was the 49 for January, 49,000. I don't know necessarily why there's such a big difference between here, the 140. It should be 140 here. But the consensus is basically what other analysts think. This is a general reading from other sources. And here we have TEF, which is Trading Economics Forecast. This is their own in-house algorithm. As we can see, we have the TEF forecast is severely lagging behind the consensus. As you can see, the consensus is closer here. These are closer here. Also, this is closer. But also what I wanted to show you is that they can be severely wrong. Like here we have 112, 71. The actual information came out minus 140. This is part of the reason why you should never trust the consensus or the forecast of other analysts. You should mostly base your decisions off going with what the actual data is like. All right. So what we're going to do today, we are going to monitor the data here coming out right here in about 15 minutes. In about 14 minutes, we're going to have non-farm payrolls for February. So we're going to be waiting for the actual digits to come out. We have three basic scenarios that can happen. Scenario number one, the actual amount comes out severely higher than 49,000, which is the previous reading, somewhere around 150. Let me say this. If it's severely higher than 182,000, then we are obviously buying the US dollar. So buying the US dollar would be a buy here and a sell here. If we have the actual data come out flat, so around 150, 182,000, then it's most likely that the general trend is going to continue. Remember, the trend for the Australian dollar is higher. So from here, from this level, we are going to be buying. I'm going to go ahead and throw on a few EMAs. So this is what I wanted to show you. See how the Australian dollar is trading right below the 50 EMA? Come Monday, you guys, come Monday, maximum Tuesday, this is going to be a good buying opportunity. The Australian dollar, US dollar is going to be a good buying opportunity. I don't see the US dollar continuously growing for, the next month. And the fact that the Australian dollar is trading at such a steep discount, it just means that we have to live this out. What can happen right here? The danger of trading from this level in the Australian dollar, US dollar, is that we may get caught. We may be trying to buy right now thinking that, oh, it's a great discount, but the price will continue lower until we get stopped out. Then we get stopped out, we feel terrible, we step away from the screen. The very next day, a bullish trend will resume. So again, the number one rule right now, all of you guys listen to this, is to not lose money. You are here to learn. Control your greed, control your desire to go all in on this one trade. That's not how you trade. That's not how you make money. Consistent, stable, small trades is how you win in the long term, because again, anything can happen. Right now in the non-farm payroll, anything can happen. We have some idea of what can happen, like I said. And what is the other variant, the last variant we haven't discussed? If the actual data comes out very low, comes out around 50,000 jobs, or maybe even a loss in jobs, this is not expected, right? Anything that is not expected in the market will have the biggest impact, will have the biggest volatility possible. So the third option, if the actual data comes out very, very small, the amount is 50,000 or less, this is going to be the opposite of all of our trades. The US dollar is going to fall right then and there. Again, if we have a look at the US dollar average, it's in fixed time trades and indices. That's where you can get your basic dollar index. This is probably not the best place to do it. So I'm going to open up the Aussie dollar, US dollar on the Forex platform, not on the FTT platform, but I'll have both so you guys can see how to trade both during a very stressful and quick thinking period of time. And right now on the fixed time platform, give me guys a sec, FTT indices, basic dollar index. So what I wanted to show you here, if we go into the daily graph, that a sell from here during an unexpected event will bring you the biggest income. So we are ready for three options, the three available options of what the market can do. Again, if it's flat, then the general trend of the other currency will continue. The US dollar will stay flat, but the other currency will take over. Now again, the Australian dollar is very weak, so it's going to be a kind of a weighing game, which currency will outweigh the other. So now that we have discussed the possible options, I'm going to see if I can answer some of your questions. Also, I'm going to put on a timer for 1 minute before okay, Google, set a timer for 16:30.
Sure, 4:30 p.m. It's for 8 minutes and 37 seconds.
Starting from now. All right, I'm actually going to change it to 29. Give me guys a second, please. All right, I set my timer for 7 minutes from now, which will give us a minute and a half to prepare, like to stop talking, stop thinking, and just watch the news. One other thing that you guys could do is something like this. Here, let me gather my thoughts. Did you guys notice the crazy uptrend? So this is definitely something that I would want to buy. This is right here definitely something you guys want to buy. All right, so the two options we have are here. All right, there we go. So about 6 more minutes. Let me see. Do we follow the trend after the news is released? Richard H., good question. Yes, you do want to follow the general trend of whatever it is. Now, again, I show you this example because there's two different trends. The trend here is US dollar weakness. The trend here is US dollar strength. So again, depending on the news outcome, you guys can have a very good trade for the long term. So again, for those of you guys that are interested in trading FTT, you want to focus on a counter trend move, something that is short term and local. For those of you that are comfortable with opening a position in the long term, for the long term, use the Forex platform, and if the trade goes in your favor and in the regard for the general trend, the global trend, let's drop this down to the 30-minute as well, then you want to go ahead and open in the general trend, in the direction of the trend, and hold it for a few days. It's okay to keep your position over the weekend because Olymp Trade does not charge for keeping positions over the weekend, only through the weekdays. So this is something very important and very helpful and beneficial to your trading. Okay, we have 5 minutes. I'm going to answer some more questions. Sir, Euro USD is already oversold. Can give us a take profit for it? Sure, let's have a look at the Euro USD. Yeah, I don't like the sideways movement. Actually, because my friend, I'm not sure where your position started. Not necessarily. Uh, I don't really see where, because we already broke the 200 WMA. This may be the end of the trend. But again, depending on what non-farm payrolls give us, uh, that will be with the information that we have today. So yeah, I can't give you a concrete answer for a take profit for the Japanese yen, for the euro dollar. Sai Sathuya, very good question. Does non-farm payrolls depend on yesterday's jobless claims? It does depend somewhat, but it shows the opposite. How many people got laid off, whereas this shows how many new people got jobs. It's very possible that several people got laid off, but then the amount of people that have new jobs is not directly related to how many people got laid off. If you understand what I'm saying, those are two separate indicators that show two separate pictures. So we're about 3 minutes in. I'm very close uh, to focusing only on the news event and on trading. Like I said, Starfighter 856 right now, the Euro USD for me personally is tricky. Why would I want to trade something that's tricky when I have two trending assets right here and they're both counterintuitive? They're both, excuse me, I mean um, counter related. So focus on something that's easy to understand. No need to get in a sideways movement. Again, traders in general lose money when the market is flat. That's research that we have done. Traders mostly lose money in those kind of markets. So many soft computers don't understand your question. What we can trade with the news, within the news. Yes, guys, keep in mind that there's also a 20-second delay. This is really, really good. Atul Sharma is absolutely correct. There's a 20-second, at least a 20-second delay. So you guys need to make sure that if you want to be trading this, you need to be trading yourself. I gave you the options, the 3 options that we have. My recommendation is not necessarily to trade it. Make sure that you're watching what I do. I think that's more important than you take this trade right now. Every single month, there's non-farm payrolls. This one trade will not make or break you whatsoever. So guys, I'm going to hold off on your questions right now. I'm going to kind of gather my thoughts and plan my trades. I'm going to do it out loud. So I will answer your questions after the event has happened. All right. The forecast and consensus are both high, so it's very probable that the outcome we're going to have is into more jobs being created. And what that means is that the US dollar could likely strengthen. So this is going to be the main position that I'm looking for. This is also very important. You want to set your duration ahead of time as well. I'm going to set it to 6 minutes because I'm going to be trading right when the news comes out. You know what, guys? I'm going to do it the opposite way. Here, on the right side, we're going to have the USD JPY. And on the left side, we're going to have the Australian dollar, US dollar. Perfect. So here we're looking to sell for 6 minutes. Here we're looking to buy with a huge multiplier and keep it indefinitely. Actually, I'm going to give the market, I really want to take this trade right here, right now. So 24 seconds for the non-farm payroll. That's huge. That's huge, guys. If you're using Trading Economics Calendar, you don't need to refresh it. It'll actually refresh itself. So we have volatility already, you guys. Huge. It's huge. It's absolutely huge. So 379,000 new jobs created. Absolutely huge. $1,000 trades going up and down. I do want to see where my stop loss is here for 1,000. Oh no. Oh no. we might get stopped out right here. Oh, this is the demo account. So this trade I'm already out of. I am not going to re-enter this trade for a minute unless we get back up here. But the Australian dollar, US dollar, if you guys are in a sell here, that's a really good, good opportunity. So let's go ahead and open up our Japanese yen trade. Oh, I missed that US dollar trade. Bummer. I want to see how high we can put this up here. So guys, see the previous levels where we have a nice spike up. I don't believe that this can keep on going for too long. So we're not going to keep the trade open for way too long. Let's see if I can find some other trades that are still going in the direction of the US dollar. So come Monday and Tuesday, you guys, you really want to be back to the Australian dollar, US dollar with a buy trade. Same thing with the British pound. These currencies are both gonna go up substantially higher from this nice selling point. So this is what we're gonna have today, and you want to buy it later on. So basically, there you have it. This is the gist of trading the news. You want to have a predetermined plan. You want to have your setup be right away. You want to have a good news agency that provides the news first. If you guys saw that, we saw a little bit of action. I quickly flicked it. I saw it. I made the trade right away because in my mind, I knew exactly what our plan was going to be. So there you have it. Unfortunately, I even missed a lot because it was on the demo account. But I switched to the live account real quick and put on the trade. I could have done a lot more better if this was if I had a lot of time to sit and plan it. But because we planned everything together, you guys, we had an opportunity to make the money together. I don't understand why you would be looking at Australian dollar, New Zealand dollar, Rahul. If you can explain that to me, I will maybe uphold that for you. So what about the Canadian dollar? So US dollar, Canadian dollar, another great currency to trade come Monday. Look at this. So despite, you know what also happens, guys? Besides the non-farm payrolls, we also have in Canada some news comes out. Huh, I guess their employment statistics came out yesterday. Do you guys see how this is not going much higher? So great news, amazing news for the US economy, but the US dollar, Canadian dollar is not going much higher. You want to be selling this currency pair. Come Monday, maybe even at the end of today's trading session, you want to get in on a sell trade with your stop loss somewhere above the 100 EMA or WMA as I have it here. All right, I'm going to answer some of your questions. So do you think the Euro USD will reverse or will it continue going down? Starfighter, again, I don't have an opinion on the Euro USD. This is not like, what do you see here? So we have a series of lows. We are in a mild uptrend. We broke a level of resistance. I don't have an opinion right now. the opinions that I had for the currencies that are good to trade, I gave it to you. Right now, if I told you something about what I see the Euro USD doing, it would be a guess. I don't want to be guessing. I want to have a reason to trade. I want to have a reason to buy. Euro USD, no opinion. I don't recommend trading it. That's it. That's my answer for Euro USD. It won't change for the time being. Who is trade after the news now, guys? Yesterday jumps claims. So what is the reason? Also fall USD up. So Yash Karakan, non-farm payrolls. You can rewatch the video to learn what it is, to learn about it. Aussie USD moving to 100 EMA, 1-day time frame. Good stuff. So yeah, I'm more interested in this right here. I'm more interested in buying this. Like, I see that this is not going to break this level. I don't believe that the Australian dollar, US dollar will break this level. I believe that this will be the end of the non-farm payrolls move. Already you can see it here. And so come in 1 or 2 trading days, this will be a good buy. That's what I see. This is the kind of currency that I would want to trade. Dr. Manajit Paul, non-farm payrolls is people getting jobs in the United States. It's new jobs created. It's required by law that if you're a business owner, you have to report any kind of new job openings. It's part of the tax system. It's part of the employment system. It's part of the social care system. And so if you have a business, you open or you start hiring for a certain position, you have to report that to the government. And that's what non-farm payrolls are. I'm thinking of trading against my indicators. Falling indicators gives a lot of false signals. I'm thinking turning them to profit. All right. I'm not going to stop you, Daniel. I don't think that it's a good idea. Your indicators give you signals for a reason. They're there for a reason. If you want to turn them off and follow your intuition, be my guest. There you go. Perfect. Cyril Afiaba really outlined it the best. Non-farm payrolls, besides the technical definition that I gave you, is basically monthly news that happens every month that people trade because it offers lots of movement in the market. It offers very high volatility in the market. So actually, I don't like the fact that it's going down much lower. I'm going to go ahead and turn the trade off again because this, I wish I got in down at the bottom. I really, really wanted to take the risk and get in at this candle here. So basically today we made $300. It's about an average salary of an average person around the world. Not necessarily a monthly salary, but you know, you can't deny that it was good nonetheless. Great Britain pound. Let's have a look at Great Britain pound. Sankar P. Great Britain pound, US dollar. Ooh, guys, look at this. So this is also another currency that we want to buy. It also dipped down lower here. So there's a few levels that we're looking for across of this line here. I'm going to go ahead and drag that down to our candles like that. And then on the 30-minute graph, there's also a much steeper line right here. When this breaks, I want to buy. And I'm actually going to put on this trade right here, right now, as I think this is the end of the move. 138.29. You guys can do this trade with me if you like. I do believe that it's going to be a good trade. I want to have a 100% stop or a 1-to-1 stop loss to take profit. So this area right here in between this level and then this level is hot, is a very, very good level. When price breaks up above this, it will likely do this kind of thing. So I want to be in the trade and out when we hit this area. I do see that the British pound historically is a very, very strong currency. like before 2016, before all the Brexit drama. And I'm actually glad I got out of the Japanese yen trade. See how what we have right now is the end of the US dollar strength phase. I wonder if I can show it to you better on the basic dollar index. But basically, we're not going to be going much higher. At least that's what it looks like to me. See how, so we're going up higher here. Why do we use oscillators? Why do we use, oh man, baloney, just baloney. I wish I could draw on my indicators here. Price is continuously getting higher here, but we have a lower high here, a lower low here. Same thing with the histogram. When you're looking at the MACD, the most important thing you want to pay attention to is the histogram. It's more important than the moving averages. And in fact, I know people that just get rid of the moving averages altogether. I recommend you keep them. They have their own signal. But when the moving averages, okay, you guys see when we have a downtrend, this is what the moving averages look like. This is a severe, solid, good downtrend. Right here, good, solid uptrend. So this is what a start of a good, solid uptrend looks like. And then when we start getting tangled right here, tangled and lower, this is going to be the start of the downtrend. So we are now getting tangled and going lower. So again, this is an indication from the MACD indicator that the strength of the uptrend is coming to an end. And usually after a very important news event, after it runs its course, that's when we have a change of direction. Other traders then take over. Sell, I got it right. Cyril Afiaba, congratulations. All green, thanks to the strategy. Janesh Murthy, I'm really glad you guys made some profit today. That's right, that's right. Ankit Sangha, for real, for the first time saw how the market moves. Guys, have a look at this. Have a look at this. This is important. Right here, this is important. I've seen maybe 100 non-farm payrolls in my life. I've traded over 100. Maybe less. Maybe less. This means that it's the end. This is the end of the US dollar strength phase, because after such good news, we normally should be up there. We normally should be getting higher. I want to have a look at the US dollar, Japanese yen. Yeah, I'm so glad I got out of that trade, guys. I'm so glad I took that profit. At least some money in my pocket for today. Why not trade directly on the basic dollar index? You can. You absolutely can. This basic dollar index is one of the tradable assets on the FTT platform. You can do it if you like. Honestly, because I'm a stock picker and I'm a day trader, trading indexes is a little bit, it's a third, it's a synthetic instrument from other instruments. I want to have like the instrument itself to trade. So if I'm trading like, if say I'm interested in trading Tesla or other tech stocks, I'd rather trade them directly and not trade the NASDAQ index. I would trade the NASDAQ index in, let me guys show you something real quick. So we have, or here, ETF. We have a volatility ETF. The ETF S&P 500 volatility ETF. Whenever this spikes up above 10, I trade indexes. That's when indexes move. Usually indexes move so little, it's hard to earn a lot. So I'm basically looking for news on a specific currency, on a specific stock, or on a specific cryptocurrency. But when we have extreme volatility in the market, it may not be the best time to trade a specific stock. it's better to trade the broad market because A, the broad market telegraphs a little bit about what it's doing. If it's going down and it's going down severely, volatility shoots up, and that downtrend will continue for a day or two. That's enough for me to get in, make some money, and get out. So that's why I use the ETF of the S&P 500 volatility to tell me when I should trade indexes like the US dollar average, like the S&P 500, like the Russell 2000, which is the mid-sized company cap in the United States. So this index right here is also a very cool index. And this is something that I didn't show you guys, but really good statistics in non-farm payrolls are really important for the likes of the S&P 500 and all the other indexes in the US market. So this is another thing you guys could have traded together with me during the webinar. I only focus on currency because they move a lot. They really move. I was not able to place two. Ooh, guys, let's have a look at the demo account. So our trade, see, this is why this strategy sucks. Have a look at this. Our trade got knocked up, got knocked in, I guess, and then came right back down and took our stop loss out. I'm going to keep this trade on though. If we go down there, I do want to sell the Canadian dollar. So you may hear of people recommending opening in both directions. It doesn't work that way. There's no legitimate way to make money opening in both directions. And this is for the young, the YouTubing panda. I was not able to place two trades due to some reason. I really don't know why. So our trade with the British pound already got initiated, guys. We're already in this trade. I want to measure where my stop loss would be. Oh, very close. Very close. Too close for comfort. 1,000 here. Let's go ahead and drag that up here to 1,600. Let's see if I can answer some more of your questions. Thank you, but you answered already to my question about your USD, and I didn't ask again. Starfighter, you're absolutely right. I'm just reading through chat, and I must have read your question twice, so I do apologize. I had a refundable result today. The price when I opened the trade was the same as the price when the trade expired. It was so thrilling and interesting. Thank you. Mr. Yaroslav, 2 risk-free trade for me today using my terminology. Good stuff. Entered US dollar Japanese trade late. That's all right. There is probably going to be a correction. If you guys are looking to buy into the US dollar Japanese yen, I don't recommend doing it right now because it's at the peak. It's at the very, very top. What I would recommend is buy the Australian dollar US dollar. That is probably going to be my next buy. Oh, yeah. Really important thing, guys, right here. Wait for the 1 hour candle to close, or at least until we break this level here. So for sure, this is a good buying opportunity, but not quite yet, guys. We are still, see how the histogram is getting smaller right here? This could be a signal that we're going to go up higher. So definitely something that should be on your watch list. All right, basically, you guys, I'm gonna wrap up the webinar so we don't take up too much of the time. I do want to remind you that you can always ask your questions in the comment section below. Any questions you may have about non-farm, go ahead and leave them in the comment section. we are going to continue our webinars next week. Make sure that you come and you bring your A game so that you guys can learn and expand on your knowledge. And usually we have really good trades, really profitable trades. Today it's looking very quiet in terms of profit. Usually, like yesterday, we had a $1,600 profit. Today with the non-farm payrolls, we were a little bit spread too thin. You should really focus on one or two assets, and that way you could have much better results. Another thing is you can preemptively open trades. As you guys saw, there was low volatility and an opportunity to capture this entire candle here. Again, if you capture only one candle, it's a good trade. For non-farm payrolls, you don't necessarily have to trade in a month in advance. You can capture 15 minutes of a move and then get out, because what you see in the market, this whipsaw, is very normal market conditions, very normal market behavior. So if you catch the initial impulse, take it like we did with the Japanese yen and be happy with the profit that you made. All right, I'll leave you guys with that thought. Thank you so much for your time, and I wish you guys good luck trading next time. Together with the Olymp Trade, see y'all next time. Peace.